What's going on, guys? My name is Dean Diaconis. This is Trey English and Seif with Coast to Coast Lending. And we each have our different experiences and perspectives at how we're looking at this market. So it's good to get another person's perspective. So Seif has been doing this for how long? You been doing this?
2018, from mortgage banker to loan officer assistant with a lender to mortgage loan advisor.
Okay. How are you seeing things in the market right now?
To me, the market actually is in good stand and it's booming. We have a very short supply, and pretty soon, like we're gonna see the housing market price gonna get going up even more and more.
Mm-hmm.
The reason why, like I said, we have very short supply, not enough houses in the market. No one wanna sell the house. With the new era, the new generation, they buy in a house, they are not renting a house. So it's completely different from a decade ago, like people they used to rent. So you have the new generation, all of them, they buy our houses. We have a short supply. We have the interest rate high, very high, and the market price high, which soon within like 6 months or so, we're gonna see like another wave of interest rate going down. So we see a wave of a refinance and the housing market keep going up.
When you say it's going to go down, what do you see that it's going down? Like, where are you getting that it's going down?
We have pretty much like a meeting and brochure and demography, like a sheet matrix. I would say the proper word, we have a matrix that comes on a weekly and a monthly basis, and we have a little idea of like how the interest rate's gonna go down. So as yesterday, for example, the rate was way much better, like I would say not a quarter point, but less, way much better. For a lot.
I saw that. Yeah, it went down a little bit. Was it 7.25?
To your side 7.25, and my side actually a little less.
Is it?
We always like at least like a half a point, 1 point lesser.
Okay.
Mm-hmm. And that's I'm talking from the primary for the primary resident, of course. Sort of interest rate and between 6 and 7.
I see. Are there different, like the kinds of programs that people can get into if you're a first-time home buyer as opposed to if you're the investor type? Like, do you have different kinds of things that work for each?
Yes, absolutely. So first-time home buyer, which I try to always explain to the people, first-time home buyer, even if you had a home in the past and you sold it, you still consider first-time home buyer as long as you didn't own a house in the last 3 years. So that's how you call yourself first-time home buyer.
So if you bought a house 5 years ago, you can become a first-time home buyer again?
Absolutely. Okay. If you buy a house, if you sold your house like last 3 years and already past 3 years for as of speaking of now, you consider as a first-time home buyer.
So you can't have ownership of the home for the last 3 years.
Exactly.
Okay.
Oh, I see. Okay. Are you seeing a lot of those in the market? Like, are you seeing a lot first-time home buyers? What kind of client are you looking at more?
And nowadays in this market, like I'm seeing like two things. First of all, I'm seeing the down payment assistant. So it's like, as 2 days ago, November 6th, we just recently in state of Florida, we had $36 million funds. Honestly, 36 million funds, like they can be gone within 3 weeks or a month.
Yeah.
So it's not a lot of money. And I had a lot of phone calls for people that I was like, with a down payment assistant, I was like, hurry up and get a contract. So I'm seeing that market. I'm seeing a lot of down payment assistant. I'm seeing the other side, a lot of DSCR loan.
What is that exactly?
DSCR stands the debt service coverage ratio. And a DSCR loan, so pretty much I don't look at your income. You can ask me how. Like you buy in a house and I don't even need like if you're making money or not. It's pretty much you put in 20% down and we do mortgage versus rent. And I will give an example. So the ratio, it has to be 1.1 and in some cases 1 versus 1.2 or versus 80%. So if your mortgage like $1,000, your rent will be pretty much $1,000. Then you qualify for DSCR loan.
Okay, so 20% down as long as the rent is as much as the mortgage would be.
Yeah, so we're making sure, like pretty much, like we know you are investing. We know you are smart.
Yeah.
You have a lot of money. So we want to make sure you're not losing.
Yeah.
So we're making sure the rent covers the mortgage.
Okay.
That's how we cover ourselves.
Yeah.
And a lot of investors, they like it because once, you buy in a real estate, like if you are an investor and you have 20% down and you buy in houses, it's pretty much those are a tax deduction at the end of the year.
Mm-hmm. Okay.
Interesting. So you're not seeing a slowdown at all.
I'm not seeing it on my side. Let me put it this way. I don't want to say history repeat itself. I want to say I'm seeing the same rhythm of 2008, 2010. But this rhythm is against the US dollar. So we live in the inflation. All right?
Yeah.
I mean, back in 2008, 2005, the housing market's corrupted. We have 2010, we had the Dodd-Frank. They regulate the housing market like there is no way it will collapse. But now we have the dollar value. Dollar value is like pretty much like the Benjamin bill equal the bill of Lincoln.
Yeah.
Yeah.
That's what kind of market we have. So it's like you have to make it twice as you usually make to keep the same lifestyle. That's why the housing market is going up. So I'm not seeing the housing market collapsing at all. I'm seeing the interest rate soon is going to go down, and that's going to be like a lot of new refinance. And what I tell my people now, like buy today, instead of like renting and throwing your money in the rent. When the market's when the interest rate goes down, then it's about time to refinance because you already get an equity of 10-20%.
Yeah.
Mm-hmm. The numbers make sense if you were to do it now rather than to wait.
I mean, usually in the housing market, you always see the interest rate going up and the market price going down, or you see the market price going down and the interest rate going down. Going down. Yeah, the market's going up or the interest rate going down.
Inverse correlation to that exact information.
It's the first time in the history of the housing market that the interest rate going up and the housing market going up.
Yeah.
Supply and demand. It's because there's been more money injected into the system, in my opinion. There's more money injected to the system. And what you're saying about inflation is just keeping the values high artificially.
Exactly.
Almost.
Yeah. I mean, yeah, so it's like, to me, like, okay, also, the interest rate is going to go down. The housing market price is going to keep going up because you're going to see a lot of refinance, a lot of people in rush. Oh, the interest rate is going down, but no one trying to sell. Plus, we have a huge short of supply.
Oh, yeah. That's what's keeping it up.
Huge short of supply.
Yeah. Extreme shortage of supply. It's again, the sellers, I think, are under the delusion that they can still sell their property for like these insane numbers. It's not that kind of market, but there are still more buyers looking for supply that's just not there. So the inventory that we're seeing sit is because the buyer's more educated. First of all, they have all the access to the information, and they're not going to overpay for a property, especially when they can't even afford it in the first place.
Yeah.
So they're smart, but they're not going to pull the trigger immediately. A seller who's got a home and really wants to sell, I think it's great because you don't have that kind of competition. If you do the homework and you go ahead of the curve, you stay ahead of the curve, you'll be fine. You'll be able to sell quick. But if you're gonna be unrealistic about your price, you're gonna end up sitting. That's why I think the inventory is a problem. If we got more homes coming on that were reasonably priced, it would be insanity.
You think it'd speed the market up a lot?
Yes, absolutely.
And now,
Absolutely.
do you guys both feel like it's a buyer's market right now, or would you say it's a seller's market?
It is a buyer market, not a seller's market.
That's what I'm
I
thinking.
tell all my people they want to sell. I was like, just refi, cash out, do a HELOC if you need money. Especially nowadays, a lot of people they have a debt, they can do a HELOC. Interest rate going down, their HELOC going down, but it's definitely a buyer market.
Yeah. Okay. What is a HELOC? Could you explain what a HELOC is?
HELOC, home equity. Home
equity line of credit.
Home equity line of credit. Thank you for correcting me. It's still early in the morning.
It's the coffee ain't kicked in.
Yeah. So HELOC, home equity line of credit. So it's like instead of doing a refi cash out. And doing the entire loan and switching your old interest rate to the new interest rate, you only get you get on a second lien, and we can do 90% LTV or 85% LTV. With a second lien, you get on the HELOC with a certain loan amount. So let's say you have equity of $100,000. You get in a HELOC of $80,000, and you have 3 years withdrawal.
Oh, okay.
And after that, the money goes back to the principal for the second lien. But getting a HELOC these days, why I'm seeing a HELOC? Because as I said, like a lot of people, they have a lot of debt. Average household in US now, they are outside their mortgage. They have a debt between anywhere 100,000
Yeah,
plus.
they're living on credit.
Yeah, they live on a credit card
Mm.
and 2 car payment.
Yeah.
So that's pretty much what we've seen, 100,000 plus. And a lot of small businesses, they've been hurt with this inflation and what's going on with the economy. So they asking for a HELOC,
hmm
which makes a lot of sense. They need some cash
Yeah.
flow.
Yeah.
What's the consequences if you don't pay? Like, how they need some cash flow? What happens if you don't pay it? What do they do? They take
For the
what?
HELOC or
Yeah.
for
Say you do the HELOC and you run out of funds. Like, you're out. What happens? Same thing as if
are
you
you
don't
talking
pay a
about
mortgage?
from the lender side,
Yeah.
funds?
Yeah. Yeah.
We never had enough funds.
Never run. Okay.
No.
We never had enough funds.
Yeah.
There a lot of wholesale lender out there. So a lot of wholesale lender, and there is a retail lender, and those wholesale lender, I mean, pretty much, I don't want to go into that subject, but they are the money.
Yeah.
Oh, yeah, okay. You don't want to go into that subject.
Yeah.
Why?
I mean, the money has a wholesale side.
Yeah.
Yeah.
So let me keep it that in this level at least.
This gets too in depth.
Yeah, the mortgage world, the money world is crazy. I'm seeing a lot of sellers do seller financing. You see them?
Yeah.
Do the seller
Lately,
financing?
I think they're trying to do anything to spark
Yeah.
interest.
Yeah.
Because they're still wanting these maximum,
Prices.
prices on their house. But realistically,
Mhm.
when supply's that low, the buyer has you.
Yeah, I
Leverage
mean,
wise,
If you are patient and you can take the payment at the time and you trust the people to make good money, you can do a seller finance.
Yeah.
Mhm.
It's a little risky, but yes, I mean,
Yeah. Yeah.
it's out there.
It's an interesting option to look at if you are a seller. I was trying to do something like that yesterday. The seller was offering financing at 5%.
Yeah.
For half the money down.
Mhm.
And I mean, if you can do it, say if you are a cash buyer and you could do it and you can do it, that would be an interesting thing because you can use that money that you're saving to go into a different direction of investment.
Yeah.
So seller financing,
Yeah.
you might as, if you can do it, throw it onto the advertisement.
Oh yeah, definitely. It sparks
Yeah,
some interest. I
yeah,
actually
yeah.
have a buyer that strictly uses owner financing. He won't get no properties unless it's owner financing
Mhm.
because of the ability to negotiate and not use a bank. He's able to talk to the seller and demand what he wants, and sometimes in a market like this, I think you're both winning. I think the seller could possibly get a better price, and the buyer could negotiate a better interest rate. So, I feel like
Yeah, there's different ways to do it.
I think it's good.
Yeah.
Definitely a bigger risk, but I'm seeing it a lot more.
Yeah.
Are we talking about seller finance or are we talking about assumable loan?
I'm talking about seller
So
finance.
I was talking seller finance, assumable loan. That would be great. I
Yeah.
mean, that applies to what to the VA loan.
No, to any loan. Assumable loans,
Yeah.
pretty much you purchased the house 2019 for 300,000.
Yeah.
Okay, your balance on the mortgage now, that says 250,000, and now the house is selling for 450,000. So assumable loan, you pretty much you're taking over my mortgage. So you're taking the balance of my loan of 250,000 with the old interest rate,
Mhm.
and the difference from 250 to 450, 200,000, you have to pay it cash.
Okay.
Oh, I see. So you're just buying out their.
Yeah, you're
Their-
buying their current mortgage, but you have to pay a difference out of your pocket.
Yeah, but you get to keep their rate.
Yeah, and you
pretty
can keep
insane.
the old rate. Yeah, I mean, I'm not seeing that much because obviously it's like people, if they have that much money, 200, 150, they're investor.
Yeah,
they're gonna
right,
buy
right,
something
They would
cash.
rather extending their opportunity than
Different direction.
they
Yeah.
don't. Yeah, they don't put 200,000 just a house. It
Yeah.
doesn't make
Yeah,
any sense.
yeah. I saw 7.9 the other day. That's the highest I've seen.
You
So
know,
the
it's
pri-
In the
6.7.
primary or in an investment again?
Primary.
God, I'm competitive.
Yeah, it was
I'm
yesterday.
very,
so
I'm very
7.9.
competitive. Okay.
But the
So-
credit score wasn't good. The credit score wasn't good,
Mhm.
and I don't know. It was one of those cases where it's like he barely got qualified. So maybe that has something to do with it.
Yeah, I mean, like you see, like the 628 and the 640, I'm giving like mid-6.
How? Seriously? Are you buying any kind of credits or anything?
I'm giving credit.
Okay. Are you buying a point down or something?
I'm not buying any point down.
Just it's straight up 6.5%.
Yeah. Hold on, camera on.
Yeah, I can't remember.
Hey, microphone check. He said, "Let me break this down for you real quick."
Okay. That's what I have in my portal.
Yeah.
So in the broker side, the interest rate are not completely this. I mean, they're not the same as you see in the bank side
Yeah.
or the lender side. We probably a little close to the lender side.
Yeah.
But I mean, like we are very competitive. So like my primary in a FHA and a conventional, I would rather use an FHA these days because I've seen the FHA interest rate way lower than a conventional.
Why is that?
I have no clue. I mean, just happened the last year, FHA interest rate much better than the conventional interest rate.
That's strange. I don't know. I thought conventional was automatic.
It doesn't make any. I know. Like usually, you're the person, you're a good guy, paying the bills, you have a good credit score, your interest rate way much better than the people they going for a FHA. But nowadays, I mean, especially the last year, FHA interest rate are way much better than conventional, and I only have to do conventional. If your loan amount past 426, obviously with the FHA, you have a limited loan amount. So, So my primary, they are in the mid six. My investment house, I call them, I'm not gonna say investment word anymore. So let's use the verbiage of qualified mortgage and non-qualified mortgage.
Okay.
The non-qualified mortgage, which they are the DSCR, the bank statement, those are in the mid 7 and 8.
Yeah.
Barely 8, but they are in the mid 7.
Yeah. And then.
So qualified mortgage, which those they are under the Dodd-Frank, VA loan, FHA loan, conventional loan. Non-qualified mortgage, those are the type of loan like a bank statement, like a DSCR loan, mortgage versus rent. I mean, all these type of loan, they don't go under the Dodd-Frank.
Yeah.
That's why we call them non-qualified mortgage, non-QM.
Okay, and that's why the rates are a little higher.
And that's why the rates, it's a little higher because you're getting the money from lender, from a private lender, obviously.
Yeah.
Okay.
Now, what's the difference between a wholesale mortgage lender and a retail mortgage lender?
Okay, so we are very, and I would say very, and I'm confident with saying that, very competitive compared a retail lender and a banks.
Okay.
We close the loan in a quick and a short term. I had some loans closed in 21 days and less. Okay. We have a direct communication with the underwriter and the processor. Interest rate, we are very competitive. Our closing cost, way less compared to any lender and compared to any bankers. The reason why, because pretty much we have the access to everything. So it's not like you're working for a company, they have their policy, they put in their number, they're making their money. No, I do have the access to switch everything. And even if I see a loan estimate, that can be competitive with me because, I don't know, closing cost less or his commission less, I can switch my number.
Yeah, you can just move.
Yeah.
So basically, you're not restricted as much as a retailer where they're stuck in a box. You create the box. You can move how you want to move. A lot more strategic. That's awesome, man.
Yeah, that's pretty much. Yeah, I can create a box. I'm not restricted to anything.
Yeah, as long as it makes sense.
Plus the variety of programs we have.
Yeah.
We have all the type of programs. I know a lot of lenders, they don't do bank statement or DSCR.
Yeah.
Actually, you mentioned the DSCR to me, last time you said that recently you start hearing about the DSCR. Well, DSCR loan, they've been there for a while, for a decade.
Yeah. Well, honestly, I've been in, and as the investors are growing, I'm hearing about these loans left and right. Went from here and there. Now it's I hear about that loan. Most of my investors I'm talking to, DSCR loans.
Was that common?
Yeah, it's very common.
It's always been common, or just recently?
No, it's always been common. I've been doing them since COVID, actually, especially when the investors, they start jumping in houses, and a lot of investors, they don't file that much. So, but it has been common. And the beauty of the DSCR, it's for investor, as I said, investor, when they making too much money, put it this way, they are smart people.
Yeah.
So it's they would rather put their money inside the real estate
instead of pay taxes.
Yeah,
wouldn't we
so
all?
Interesting. Yeah, interesting. So you said you did it since COVID. What's been the biggest difference in the market that you saw pre-COVID and while on COVID to now?
Okay, from COVID past COVID, during COVID, actually, we see a huge boom in the real estate business, whether for real estate agent like you guys or a mortgage broker like me. And after COVID, the interest rates started going up. We got the inflation. Now it's the entire economy and and the war is pretty much we are in a war.
Yeah.
Uh, and we get a lot of short of supply, so I can see the picture of 2019. I can see the histories it's repeating again.
Yeah.
So before we had COVID, but pretty much now we have Ukraine, we have what's going on outside the world. So that's why I'm saying, I can see the real estate market is booming again. Like we're going to see a new wave for
You think so, huh? Really?
Yes.
That's interesting. I can
So-
see that happening.
And like I said, you have to put it this way: the new generation, the era we live in, the new generation, they buying homes.
Yeah.
It's not like before they used to live. Okay, they're in together, couple, boyfriend, girlfriend. Now they buying houses.
Yeah.
They don't wanna losing their money and throwing their money in the rent.
Yeah.
They are very educated.
Right. They're. I think they're the most educated generation. They grew up with these smartphones. You know, that's you.
Yeah.
That's me, honestly.
Right. Yeah. You got all the information in the palm of your hands.
Yeah.
You could make things faster than anybody.
I feel like it definitely adds to the knowledge, but it sort of makes us a little dumber. But that's for a different time.
It's quicker.
I mean,
Efficiency.
nowadays everything's smart. Smart TV, smart phone, smart car, smart water.
Yeah, you don't gotta think anymore. You just be like,
That's what I'm saying. I feel like as good as it is, it's still like
"Hey
a
Siri,
handicap at times.
what's 2 times 6?" You know what I mean? Like, you don't think no more. Don't need to do that. But yeah, with that brings you can reach out to anybody you want to reach out to at any given time, at any moment, which I think is also going to help the real estate market, because now you got places like Zillow and realtor.com and all those things saying "Hey bud, you looked at this house the other day, you still interested?"
Yeah.
And it just piques your interest again because you get that notification. So I think that those people are also going to become buyers at some point. They're going to be seeing these price drops and being like, "Hey, I just got this price drop last week. Here we go again. They're gonna be like, "Oh, let's make an offer on this thing and see what loan options there are to give," and they make a move. I don't see things going down too much further, even with rising interest rates, because the buyer's so educated. They know what they're doing. They know what's a good investment, what's not a good investment, where the strike price is on a piece of real estate, and that's why I don't see this market slowing down as much as people think. It's going to be slow, but on the sell side, make the right choice, do your homework, don't get greedy. You got a lot of equity, don't get greedy.
I feel like that's another thing. I almost look at it as a correction in the market.
Yeah,
things skyrocketed so
quick.
fast, so quick.
Right.
Look at any chart. Nothing's just going to keep going up forever. It has to be
Exactly.
some balance, but at the same time,
You got to
in Tampa
check the.
alone, I feel like this market is on fire, and it's going to stay on fire for the next
agree.
decade.
I agree.
Yeah, I agree with you guys. And I'm seeing the going down the interest rate. I'm not seeing the housing market going down.
Imagine what would happen if the interest rates dropped down to 5%.
It's going to be more
gosh.
buyers.
It's going to be insanity.
Actually nowadays, the seller, they don't want to sell. The people, they don't want to sell. Even knowing they have a lot of equity, they don't want to sell. And that's the huge problem.
Yeah.
And we live here in the state of Florida. We have a lot of moving in. We have almost 2 million people. They moved since 2019.
Yeah, I think it's 1,000 people a day.
Yeah,
I'm
so
moving to Florida.
That's
1,000 and some change
So-
a day.
And
1,000 people
all
a
of them,
day.
New York and California, Arizona, working remotely. They want to buy houses.
They want to cash in, and then you got the people the people in tech who don't need to go to the office. I mean, not those, you know what I mean, the people on the apps and stuff like that, the TikTokers who are growing up in Canada and stuff.
Yeah.
Nothing against Canada, but I'm saying maybe some people don't like the cold and they're like,
Yeah,
I want to get out of here,
exactly.
And those people are going to be coming down here, and they've made a lot of money up north, and they're bringing a lot of money down south. So
Yeah. Well, I feel like
And they want to enjoy the sunshine state.
Yeah. And the life. A lot of people who aren't familiar with this area have no idea the potential that is not potential. What is going on in this area? It's amazing. It's fun. Life is spectacular. You get to see the sun. How many? 355 days out of the 365.
Oh yeah.
That makes a huge difference. Huge difference in lifestyle and just morale. You wake up in the morning, you're ready to go, you're happy.
You ain't chiseling ice off your
Going to
windshield.
the beach all the
Yeah.
time,
Gotta
seeing
go
the
out.
shark, the gator.
Yeah, exactly.
Not even going to the beach. The beach is great when you go, but those days are few and far between the longer you're here. But just waking up in the morning, you're like, let's go. Let's have a cup of coffee. Let's get things rolling.
Outside,
Yeah, let's go.
It's 70 degrees.
Let's go for a
midwinter.
happy hour.
Yeah, let's go. Yeah, exactly.
In
Right?
Chicago,
Why
it's
not?
fucking 40 degrees, 30 degrees.
Right.
We're out here and it's 80.
And then we complain, oh, it's a little brisk this morning at a 59 degrees, which was nice. It's nice.
Yeah.
59 is nice. Yeah.
It's definitely
Those people coming down, they're coming down, got a little carried away, but they're all coming down too. That's why it's like there's the supply and demand problem. It's a battle between buyers and sellers right now, and it may be pushing towards the buyer's market, which is why I'm saying buyers, it's an opportunity right now, but it's going to swing far to the sellers real quick, real soon.
Yeah.
Make your move. Just make your move. Make your move. When I bought my property, everyone was saying, oh, you're buying at the height. You're buying at the height. Why are you doing this? You're paying so much for your property. I see the direction of this market. 3.2. I got 3.2% interest rate, which is fantastic, and the price just kept going. You think if the interest rates were to drop back down to like 4 or 5%, you think this market's going to stay the same? The sellers are going to win this tug of war and win big.
It'll literally be like if there's two people pulling on the rope and then one just let go.
Exactly. Yeah.
Literally. Wow.
Right.
Actually, you brought a good points. Like back in 2008 and 2010, when people they buy in a house, they live in a damn. We're in a recession. You bought the house. I mean, the top price.
Mm.
Guess what happened? 2019.
Yeah.
Their house is priced like double, triple.
Double.
Yeah.
And you may
It's
be
10
thinking,
years.
Yeah, 10 years. 10 years. People are thinking, what if the market doesn't go up for 10 years? What if it doesn't go up for 10 years? How long you plan to hold this asset? You know what I mean?
30 years.
Yeah, 30 years.
That's what I'm
You're
saying.
stuck for 30 years.
Exactly.
So, if you're going to buy in a place, there's no better place than the Sunshine State, whether it be for my opinion, for the future of the real estate market. I think here is going to be booming. But not just for that, but just to have some mental clarity and to just feel that heat of the sun. The heat of the sun with the no humidity, by the way, now is gold.
It's the best time of the year, bud.
And I feel you guys up north. I used to live there, so I feel what you're feeling. But yeah, it's amazing down here. Truly. Safe. Are you from Florida?
Actually, I lived in Michigan.
So you know how it is.
Yeah, I've lived here my whole life.
I'm not missing a part of it. I love Florida. I moved 2011, and since then, that's my place.
No
Yeah.
looking back.
No,
What part of Michigan?
Flint, Michigan.
Flint, Michigan.
No.
How's the water?
Oh, no.
We didn't have a water problem back that time.
You didn't- Oh man, you didn't taste the difference in the water? No. I mean, I can imagine.
We have a better water here.
This tastes a little like shit. Thank you guys for watching. If you need anything from us here, I'm Dean Diaconis in Tampa Bay.
I'm Trey with Yellowtail Realty.
I'm safe with Coast to Coast Landing.
And there you have it, guys. Take it easy. I'll put the contact numbers and descriptions and where you can contact everybody in the description below. And until next time.
Thanks
Take
for
it easy.
tuning in.